Hi, this is Alessio, Rastani, leading trader. Hope you're well. As you probably guessed, I am back from vacation, and it's good to be back. And one thing I should say, by the way, guys, is that it's a really good idea to take a break from time to time, go on holiday, go on vacation, because often when you take a break and you come back to the markets. So, what I often try to do is when I go on a holiday, I try my best not to look at the markets too often. So that's why you probably have not seen a video from me for some time. But the good thing is that when you take a break from the markets, when you take a break from the charts, often when you come back, your brain can readjust to what the patterns are, what we're seeing on the charts. So often you come back with a fresh and open mind, and you might see patterns, maybe signals that you could not see before. So again, it's a really good idea to take a break, not become too obsessed or too focused on a market, and just go on vacation or holiday, come back and take a fresh look at it with a fresh open mind. Now, here's something I want to bring to your attention, and here's what I'm seeing on this chart. A very interesting, and I would say a very powerful pattern, which you might have noticed yourself, but I think it's important to actually expand on this. Let me just bring this to your attention in this video. And I want to show you why this pattern is so important, why it's so useful, and how we can use it. So take a look at this. This is Bitcoin, and I want to just expand this chart. I want to show you Bitcoin really from, so here's, as you can see here, this is the, if I just show you here on this chart, I'm using the chart, the trading view here. So this is the peak we formed, the top we formed back in December of 2017. The drop that occurred, that's the bottom that formed back in January or February of 2018. The other important low that we formed here back in June of 2018. And so far, as you can see here, the market has been going in a sort of sideways but downtrend manner. Now, let me zoom back a bit here and bring this to your attention. So there's a very interesting pattern that's been developing here. And what I want to do is show you how it works with this indicator. This is an indicator you can find actually on any charting platform, and it's here on TradingView. It's called Fib retracement. Now, I'm going to go and select this, Fib retracement. What you want to do then is left click on your mouse or your cursor, left click at the top of the move, and then drag it down to the bottom of the move. Okay, so in other words, I'm just dragging it from the left to the right to the bottom. Okay, now, by the way, the settings of this indicator, let me just show you. The settings are thus. So what I tend to use is the 38.2% and the 61.8%. These are the two most important levels of the Fibonacci tool. Now, of course, you can use the other levels too if you want, but these are the ones that matter to me the most, and actually matter to chartists the most as well. 38.2, 61.8. And in case you don't know what these levels are, again, we don't have time for that in this video, but just remember that these levels, these important numbers, 38.2, 61.8, are important levels in nature. Okay, so they have a significance not just on the charts, but also in nature. Even in mathematics, they have an important significance. All right, guys, so that's the way I do it. And then take a look at this. We drew this from the top to the bottom, and notice what happened next. Bitcoin retraced. Bitcoin staged a rally, but look what it did. It came back to the 61.8% Fibonacci level, and it stalled at that level. Okay, now this is very common in market movements and in technical analysis, because often markets retrace about 61.8%. Sometimes I would say actually 38.2 to 61.8% they retrace back. But 61.8%, this level here, is a key level, that red level that you see on my chart. So again, notice, by doing this retracement tool, we found that the 61.8% retracement is right here, and Bitcoin rallied into that level. It failed to get much traction above that level, and then it collapsed. Okay? Now, I'll explain how we can use this to our advantage in just a few moments. But let me just give you another example. So if I just get rid of this, okay, let me show you another one. So notice after Bitcoin drops, again, from here, so Bitcoin drops from, again, we're talking about from the May high down all the way to the June low. So we're going to do this again. We're going to do the exact same thing, Fibonacci retracement from the high to the low, right there. Now, notice again, something very interesting happens here. And I want to bring this right here, focus on this for you. So notice that Bitcoin stages another rally. That's the rally we saw back in July. And notice what happens again. It comes up to the 61.8%. Again, the same level, 61.8%. And right about this level, again, it fails to get above that level. It fails to get much traction above that level. Bitcoin fails to sustain itself above the 61.8% Fibonacci level. And again, look what happens. Bitcoin then reverses direction and then falls apart. I have to say that at the time when I saw Bitcoin coming up to the 61.8% level, I was of the opinion that it could actually break through that level. It did not do that. And the fact that it failed, this is an important point. The fact that Bitcoin failed to get above that 61.8% level is an early powerful signal that there is weakness, internal weakness. And that is usually the levels when sellers can take control and push the market in the opposite direction, as it happened with Bitcoin right there. Okay, so bottom line is this, guys. When you see Bitcoin coming up to this 61.8% level and it fails to get much traction above that level, that is a good level. Perhaps one could take profits, and indeed one could consider even maybe looking to the opposite direction. By the way, the same thing happened again. Look at this. Notice the drop that occurred from here. Let me just do this one more time. So I'm going to draw the Fibonacci retracement tool again from the high to the bottom here. Okay. And notice what happened yet again. So Bitcoin yet again puts in a rally. But notice yet again, it fails to get above the 61.8% retracement level. Okay. Very close to that level. It just couldn't get anything going above that level. That was at the 7,500 level, by the way. And if the market, if that price cannot get through, cannot sustain itself above the 61.8% retracement level, which is this level you see here, that is an early indication of internal weakness, that something isn't quite right, that this rally could actually fail. And indeed, this rally did fail, as you can see right there. So guys, the bottom line is this, that we've seen this happening now on so many occasions with Bitcoin. So many occasions now Bitcoin has been making this 61.8% fib retracement level. And let me just show you just one more time. There it is. So that 61.8, that failed. Okay. Yet again, here it was. This failed. And yet again, this here failed. Okay, these are all 61.8% Fibonacci retracement levels that failed, that showed, in other words, that showed that price just couldn't get through that level. By the way, this doesn't just happen in the downward direction, it happens also in this direction too. Let me show you in the upward direction. So notice this was the rally that occurred in Bitcoin last year in 2017. So if I just draw from this low to this high, look at this. Bitcoin dropped in December of last year. Bitcoin dropped right down to the 61.8% level and it bounced off that level. And by the way, let me show you this. This is from July to September of last year. Look at this. Now, this drop that occurred here was also a 61.8% Fibonacci retracement level. Let me show you. So again, we're going to draw a Fibonacci retracement tool from here to here. And there it is. Notice that Bitcoin, yet again, when it dropped to the 61.8% fib level, and then it was here that it staged a rally higher. Okay, so knowing where these levels are and keeping an eye on them can be immensely powerful, immensely useful to your analysis. Now, how does that affect our picture of the Bitcoin market right now? Well, take a look at this. This is the drop that occurred in the last month or so, in the last 30 days. So this was the top, this is the bottom. Here's the drop, and notice what Bitcoin is doing right now. It's doing this retracement. So let's do our Fibonacci retracement tool again from this high to this low. And notice where the 61.8% fib level is right now. As you will see, it's right here, near the 7,000 level. Okay, so near 69.20 to 7,000 is where the 61.8 Fibonacci level is. Which means what? Which means if Bitcoin comes up to this level, there's about an over 50% probability that Bitcoin might yet stall at that level. But here's an interesting point. If Bitcoin can successfully get itself above that level and sustain itself above that level, that is where we might see some signs of strength. Okay, so that's why we look at these important Fibonacci levels. If Bitcoin can get above that 61.8% level and sustain itself above that level, might be a good sign for Bitcoin. But if Bitcoin gets into this level, if Bitcoin comes up to this level, and yet again, we see failure. If we see failure at these levels, reversals, weakness, then guess what, guys? That once again is another indication of a 61.8% retracement holding effect and pushing Bitcoin back into support. Okay, so an interesting pattern. Keep your eye on it. And guys, if you like this video, please give it a thumbs up and also please subscribe for future updates. Thanks very much indeed.